Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Bitcoin, but before we begin, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you just want to show some general support for what I'm already doing on YouTube, then you can join Tier 1 for £5 a month, and it will also bag you an exclusive video each week that won't be available on YouTube. If you join Tier 2 for £10 a month, you'll get the same exclusive video from Tier 1, but you'll also get voting rights towards monthly deep dive videos. You'll get access to all of the educational videos on the Patreon, including my original Elliott Wave Theory series. You'll also get early access to YouTube videos before they become available, and you'll also get access to the public Discord, where there is a multitude of channels in which you can engage with the community and me directly. Now, if you want to join Tier 3 for £15 a month, you get all of the things in Tier 1 and Tier 2, but you also get access to my monthly dividend calendar and stock rating system. This is where I list my favourite stock picks for the month, all of their ex-dividend and payment dates, and then give all of the stocks listed a rating out of 30 based on my own proprietary rating system. I will also offer the service of looking up any ex-dividend or payment dates for stocks you may be interested in if you can't find them for yourself, and if you have a particular stock that you are interested that isn't on the calendar of a stock rating system, I can look at it, rate it and come back to you with the results. Alright, thank you for listening guys, now let's get back to the video. Welcome back guys. Right, now I wasn't sure I was actually going to get a video out on Bitcoin this week. I've been very under the weather, unfortunately, been wrapped up in bed with the flu. But I've been feeling considerably better over the last 24 hours, so I thought, what the hell, I'll give it a shot. Now, if I can get this finished and edited and ready for today, which is Saturday, I'll get it out later today, but if not, it will be Sunday. Right then, without further ado, let's get underway. Now, the theme of today's video is we're going to be taking a little bit of a step back from obsessing over the Elliott wave count, trying to simplify the current price action. We will be talking about Elliott wave and we will go over the possible Elliott wave counts for this more recent price action, but I don't want to get caught up in the minutiae detail because at the moment there's a bit of paralysis for analysis going on. I've seen it in a lot of places and I've been subject to it myself in the past. So we're going to try and keep things a bit simple. We're going to have a quick recap first about the longer term count and the longer term view on Bitcoin, and then we'll come in and have a look at both bullish and bearish options and how we can lay some simple ground rules to help us make a decision. Okay, so first thing I want to do is just strip away all this complex count for the moment, which is the impulse from the low of 2018 and the bullish count we had on display there, and just talk about this move up and this move back and this move up and this move back and how we can interpret this. Well, there are two ways, and this is just a quick recap of the longer term count. So we have what I say simple bull, simple bear here on the object tree. So the simple bullish count is this, that we had a nice clear, 5 wave move up into a 1. Okay, and then a 3 wave move into a 2, and then a 5 wave move into a 3, and then a 3 wave move expanding flat into a 4, and now we've gone 1, 2, 3, 4, possibly with a 5 to come before correcting into a 2 and then pushing higher. That's the simplest way of interpreting the bullish view. Okay, so let's just move that object tree out of the way for the moment. Oh no, wait a second, we're going to need it back, aren't we? Because we just need to take off the simple bull. So then let's look at the simple bearish view. The simple bearish view is the exact same into the 1 and the exact same into the 2. But instead of having completed the wave 4 is not complete. And that is likely, if the bearish count is correct, will play out as a zigzag with 5 waves into an A, 3 waves into a B and 5 waves into a 4, and then we'll move up into a 5. Okay, So that's the simple long-term view, and like I said, I don't want to go digging through any more detail at the moment on that. I've done it multiple times in previous videos, feel free to go back and look at them. But this is the pitchfork we're using currently to express the geometry behind these two options. And it's quite interesting at the moment that we came back to test this pitchfork on the median line exactly, and we have since rallied. So let me just turn off the count again and I will show you what I mean. So we're just going to zoom into more recent price action and consider this long-term pitchfork. So we're still on the weekly time frame. You can see that we came down to test this level here, this green dashed line, came up to this one, came back to the median line. Now what I'm just going to do is I'm just going to change the settings for this to this one. Okay, and we can see that this what was a green dash line now becomes a red dash line, and this is just me applying every viable Fibonacci number essentially, plus a couple of other important levels inside of this pitchfork from a median line. So this would be the 23.6 here, and this is where we came to. We came up to this 23.6 here, and then came back to the median line, and we found support for the meantime. We've bounced, we've come down, tested it, come back up, come down, tested it, and we're at the moment we're bouncing. So there could be a potential move higher in the short term. Now let's just strip this back even further and look at the simplest version of it. There we go. Right, we'll keep that like that for the moment. We can see this touch on the pitchfork. Now if we close this one down and we come in and have a look on the daytime frame, before we bring up the Elliott wave count, which we will, but we're going to try and keep the Elliott wave count as simple as possible, because when considering this recent price move, we need to keep things simple in terms of deciding what we're going to do about it. Because at the moment, things are not clear. And when things are not clear, getting caught up in the minutiae of the Elliott wave, which I love, Elliott wave, everybody who knows me knows that, and I think it's an excellent tool, but sometimes it's a good idea to just leave it behind for a little while, go and look at some more basic analysis and see what you can make of the count in a simpler manner to help you make a trading decision. So here we are on the daytime frame in the more recent price action. Now I have a couple of pitchforks here that I want to share as well. I'm sure I've used these before. We have this one. Now we'll switch off of log here and we'll look at everything in linear scale for the moment first, because we're looking at, yeah, it's a pretty big price skew, but we're at the top of what was the most extreme price skew. We're looking at a range from 64 down to 28 rather than, you know, 4 grand up to 64. So you can see how currently the initial swing here provides the best overall picture of all the price action that's come around since. Okay, so everything's contained inside of this. Alright, now I have seen some people, and it's fine, who have interpreted this is the low and that this is a 1 and a 2 here, and then they've gone 3, 4, 5 into a 1 here, and now they're saying 2 here. Now we may well end up in the same position in terms of ending up where we both ended up in the same place, but I prefer this pivot being the 1 and the 2 purely because the geometry fits better. If I show you what I mean by trying to place a pitchfork off of this as the 1-2 swing, there is one other reason which I'll mention as well, but let's just try that first. We'll get a little magnet, come down to here, come up to here, and then come down to here, and you can see how nothing since has been contained within this pitchfork. So the idea, I feel, that this is a 1, 2, 3, 4, 5 having fallen so far out of it, I don't like the look of that, to be honest. So I'm not a fan of that idea, but what we can do is give it the benefit of the doubt and say that we've got an unconventional impulse wave with a longer extension in the 1, right? Which is how it appears to be. So perhaps we have to give it the benefit of the doubt and switch it into a shift pitchfork instead and say, does this fit? This fits better, there's no doubt, than an original pitchfork, but I don't think with the overthrow here, overthrow here, overthrow here, and then a throw under here, that this fits as well, is what I would say, as this one does. So we will keep it as an option and we'll just lock it and hide it for the moment. But I think this is a better fit that contains price better. We haven't fallen out of the pitchfork like we have on the other interpretation. We haven't had multiple throwovers well beyond the outer bound multiple times either. This seems to contain price better in my opinion, and that's why I prefer this being the initial pivot rather than this here being the initial pivot. But that's just personal taste. Now, the next reason I prefer this interpretation or placement of this pitchfork and my proposed 1-2 here is because if you're assuming this, excuse me, just turn the magnet off, is the 1 and the 2, then this means this was the bottom, but we got a low which is higher than this low. So whatever you're saying this is, you're saying it truncated, okay, and finished before this low here, which I find very, very peculiar. So your interpretation of how we got down to here, I'm not quite sure how you would do it. You'd have to maybe say 1, 2, 3, 4, 5 with a truncation here, and then that's an A, that's a B, and then this here is a C. This area here, that just doesn't look right to me, and it's a C which completes in a truncation. So that's why I'm not a fan of saying that this was the impulse off of the low. I think this was the 1-2, and it contains all subsequent price very neatly. Okay, now the next thing I want to look at, that's the major pitchfork, is this one here. Now this is the pitchfork which was tracking the correction on the bullish count. The idea that we went A, B, and then C. Okay, so we had a 3-wave move, 3-wave move. It's in here as a zigzag, A, B, C here, and then sharp 3-wave move, long suspended expanding 3-wave move into a B, and then a 5-wave move down into a C, and then 1, 2, 3, 4, 5, so on and so forth. Alright, what I find interesting here is having completed, from a bullish perspective, this count down into a completed correction of the wave 4, and then we impulse out of it. We have back tested the structure of this pitchfork with a test here on the outer bound, and then we've bounced temporarily. Now, it would be a wonderful and simple world if after back testing something like this we had a beautiful, clear 5-wave impulse, but we haven't been provided that. And that's just the way things are sometimes. We just don't get to see what we want to see. So rather than force our interpretation onto it, we have to be a little bit more open-minded and consider the other possibilities. Now, I know it sounds like I'm going round the houses here to get to my point, but I just want to try and give a better overall view of the situation. Okay, so now that we've covered all of those, let's hide that one. So now we can come in and actually consider the various bullish counts off of the low. Now I'm not abandoning, you mustn't think I'm abandoning the bearish count completely either. The one thing we have that I don't think, you could dispute it, but I don't think it's easy to dispute, is that this looks like 5 waves all day. Okay, so trying to force a zigzag into this move sounds like bullshit to me. I'm not saying it's impossible, it just doesn't look right. This looks like 5 waves. So what do we know about 5 waves in the simplest form, in the simplest understanding of what 5 waves are in Elliott wave? Excuse me. 5 waves is either the start of something or it's the end of something. Okay, so this is either a completed 5-wave move into that C, after 3, 3, 5, or this is the beginning. Okay, this is 5 waves into an A, this is 3 waves into a B, and there's 5 waves to come. So we end up in a situation where we've seen a potential impulse, it's not clean, it's not pretty, and that has made life complicated. We've seen a correction underway which hasn't seemed to be complete either. This also adds to the complication. So we need a simpler way of observing this. So let's come in now and consider some of these bullish counts first, because the bearish one's simple. Okay, we've started what's going to be a 5-wave move down. Right, that's the bearish interpretation. I don't think that requires much more consideration, because we won't make another high if that's the case. If we do make another high, then I think we're bullish all the way at that point, and we should continue to interpret it we should continue to interpret it that way. So let's find the bullish count first. Alright, so this is how I'm counting it, and because of the lack of clarity in this impulse here, we've got a multitude of ways of counting it, and this is what causes paralysis for analysis. I can count this probably half a dozen ways, and then I can get caught up in the smaller wave degrees and make that even more complicated. Now I just want to illustrate what they are before I basically share what I'm looking for, because I show you how easy it is to get caught up in this. So 1, 2, 3, 4, 5 into a 1. This is an A. This will be 3 waves into a B. This will be 5 waves into a C. Wave 1 into wave 2. Off we go into wave 3. So looking from a trade setup point of view, we look for a 5-wave move down to come and then a reaction. Okay, first move up in 5 waves. First move back in 3 waves. We enter and then we go with the stop placed here. Right, that's what we'll be looking to do. Now if we get another high in the meantime, okay, we have to consider something else, because this was a completion of something and this is an impulse forming. Now I'm less inclined to believe that, because the move off of the low of what we've got as our A here is not convincing as an impulse at all, but this is a bit of an ongoing problem at the moment. So that's the first interpretation. We've done an intermediate wave 1, which is complete up here. We're working on an ABC into intermediate 2. So what would we like to see if this is correct? Well, let's go back to our pitchfork for this one. Is it this one? Right, so this is 1, 2 at minor degree. This is 3, 4 at minor degree. This is 5 at minor degree into intermediate 1. If this is intermediate 1 complete, or a 1 of greater degree, whatever this subwave is, then we should see a break of this pitchfork, because we've left minor degree behind and we've leveled up into intermediate degree. So one would expect to see this pitchfork break. Okay, and that would be strong confirmation that whatever wave degree this was has now been left behind and we're into something bigger before we move up again. Okay, so that's what I'd be expecting to see. Obviously I'd want to see a 5-wave structure down as well, and before I entered the trade I'd want to see a 5 up and 3 back. Alright, that way I've got a safe place to place my stop and I won't get trapped in a trade I don't want to be in. Alright, so let's just hide that again. So that's option 1. Okay, and let's just go back to our pointer. Clear this off. And then we've got an alternate count here. Now this is the idea that we have not completed 5 waves up yet and the intermediate 1 is yet to come. This is the idea that this is an impulse off of the low. I've actually repositioned this because I just remembered there was an alternative. So whether we say this is 4 here, okay, and we've come down in a super fast zigzag, that we have to look at a very small time frame, which is incredibly short and violent relative to the long and meandering expanding flat we've got here in the 2. An alternative would be to, because I think we have to be looking at a zigzag here, in order for this count to be valid, or it's a zigzag to here with a truncated C. Now, you know how I feel about them. They're incredibly rare, and I don't like the look of them, but I'll give the benefit of the doubt for a moment for one reason, and let me show you why. We're going to have to come into the hour here to consider this. It's possible that all of this here, I mean, I'm looking at it now and I'm having serious doubts. Let's just consider the possibility of a triangle in the way here, in between all this, in amongst all this noise. Okay. Could you say A B C D E? What, and then this is a free wave move, and see, that just looks like that. See, I've lost confidence in this idea already. And then we seem to have an impulse off of the low here. Okay, and you can see why this is messy. This is tricky to deal with at the moment, because we can't pick out an impulse here. Even if we come down to the 1 minute chart, we can't pick out an impulse off the move off the low. So could we say that you've got 1, 2, 3, 4, 5 down into an A, and then A, B, C, A, B, C, B, A, B, C, C, A, B, C, D, A, B, C, E, and then 1, 2, 3, 4, 5 into a 4. But then what's this huge spike and back here? That cancels out that idea, because we can't say 1, 2 going lower than where 1 began. Obviously that would be breaking a fundamental Elliott wave rule. And can we say that this was a 5 wave move down on its own and this was a different part of the triangle? We'd have to move the lower bound to here and the upper bound to here, and then you'd have to work it with A, B, bump, 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 C. You can only get 3 swings which lead to lower highs and lower lows without invalidating a previous high or low. So I can't really see how that would work on second thought. So I think we'd delete that, and you'd have to say that this is the 4 here and this was just an insanely violent zigzag. And there's 1, 2, 3, 4, 5 waves into here, A, B, C, and you basically can't see it. Now I find that a little hard to believe, if I'm absolutely honest. So we're in a state of uncertainty. We do not know. We do not have enough information at the moment to make a decision and to have a clear understanding of what's happening. So now that we've discussed all of that, let's discuss a simple way of interpreting it to help cut through all of this Elliott wave confusion that's causing us problems at the moment. The way I'm going to look at this for myself is to just be patient, okay, and wait for it to tell me what's going on. And what I'll be looking for is, if this interpretation is correct, all I'm waiting for is either a move to another low with that 5 down for an A, B, C, okay, and I will treat this as a 2, okay, and then I will look for a reaction, pull back to enter, and then go forward from there. Right, that's the one thing I'm looking for, and if that happens, I will take that trade. I will take it with the usual standard trade setup that we teach on the Discord for Patreon members, which means I'll have a tight stop in place, and if I'm wrong, I'm wrong, but it'll be a safe trade either way. The alternative, which I will look for, given this alternate count, not sure how to interpret this at the moment, but the thing is, if we get another high, then I will look at this as having maintained that pitchfork, which we were talking about. I swear, I will find it momentarily, and I will look at this as 1, 2, 3, 4. Okay, scruffy as hell, sorry. Let's just try to do a little bit better than that. Let's hide that one and bring this one back up. So I will look at this as 1, 2, 3, 4. Structure still intact, 5. At that point, I would argue we've seen 5 waves complete, which means we've got a 1. So now you wait for the zigzag into the 2 to break this pitchfork and find the 2. Now you get your reaction, you pull back and off you go. And that's it. I don't see any reason to overcomplicate it more than that at the moment, because I think you could just get absolutely flabbergasted if you're not careful, trying to count your way through all of these minutiae corrections. So that's the bullish interpretation, and I'm happy to take that bullish interpretation, and I'm happy to take a trade off of it if I see either of those two outcomes. Alright, so I'm going to try and explain that as clearly as possible again, because I don't want to cause confusion. A new high, I'm saying, will convince me that we've had 5 waves into a 1. That's what I'm saying, a new high. At which point I will wait for the pullback outside of this wave degrees geometry to convince me that we've got a 2. At that point I will look at it bullishly and enter, and if the bearish count were correct, I'd be knocked out with a minimal loss. If we move lower, I will consider this a 5 wave count complete here into a 1, and this an ABC out of that geometry into a 2, and then I will take that trade instead. Okay, and I think that's the simplest way you've got to look at it at the moment. How you want to trade is totally up to you, but that's just the way I'm going to look at it. I need a simple rule to follow when I don't know what's going on. So and I don't know what's going on exactly at the moment. I just generally don't. So on that basis, let's look at, we've done our bullish counts, and now we've got the simple bear count, right? Because we're not going to concern ourselves with making a new high with the bear count. Okay. Now, why am I saying that? Well, the first thing is we've retraced into the golden ratio, 61.8, 65 here, and we've had a violent reaction down. Alright? And we've had what is potentially a 1 and 3 waves into a 2. That's the bullish wave, the bearish way of looking at it. And we will work our way down to target down here in the 4. Okay, so the typical confusion, which is always going to come about when you're looking at a potential 5 wave move, is it the bullish A, B, C, or is it the bearish 1, 2, 3, 4, 5? Well, the only thing we can really point to is we'd expect the bullish A, B, C to complete at 100% parity, wouldn't we? Okay, that's the most typical place for it to finish, that C will equal A. This is not likely the case in an impulse down in a C wave. You will likely get a 1, 2, a much longer 3, a 4, and then a 5. And the 3 can come to the 123.6, 138.2, and the 161.8, or even greater. Or even greater extension for a wave 3. So if we continue down and we reverse, and this extension goes beyond the 100, beyond the 123.6, and it keeps going, then the likelihood is that you're in a wave 3 of a C rather than the ABC of a 2. It's just more likely at that point. So that will be something to watch for if and when it happens. Besides, you're not trying to catch a falling knife, remember. So even if you were to see a 3 wave move and we didn't get that extension and we got the 1-to-1 parity, and then you saw a reaction and a move back, that's potentially ABC complete, and you can get a very safe trade on there. Now, if it goes way beyond and continues to extend, then I think at that point you have to be a little more cautious and assume the possibility that we're in a 5 wave move down in a C of this primary 4. Alright, so that's just the bearish count. Now, I've already outlaid multiple times in previous videos my concerns over the length of this C wave, so I'm not going to labour that point again. I've made it clear before, but excuse me, sorry, voice is going a bit. I made it clear multiple times my concerns over it, but it is what it is. We've come to the golden ratio and we've reversed, so we have to entertain, at least entertain the possibility that this is a bearish reversal and it will play out as such. That's one of the possibilities. Alright then, so let's We're going to wrap up with some basic analysis now as well. I think I've discussed everything I want to do, or want to talk about. Bull targets, are they the higher ones? Yes, they are. Bearish targets, I've discussed these in previous videos, but I'll just bring them up. If we do see that 5-wave move played down, then and this is a 5-wave move here, and then this is a B, and this will be a 5-wave move here, and then C equals A parity at 23,267, and that's in log scale, which is what I'd expect it to come to, given the price skew that we're dealing with. But if we were to get a linear scale C equals A parity, it would be all the way down at 16,680 spot 66. Now, I just make sure that that's definitely the case, because we may have gone higher since I made these measurements. No, here it is. So that is the correct figure. Alright, so bearish targets, that's where they are. Alright, so one more thing I just want to add to the chart here. We've already got our pitchforks, but let's just add a little channel on here, because it should fit. Yeah, the channel should fit an impulse, just as it should a correction, or a zigzag correction at least. So we're saying this was our high, and then we had this expansive swing into an ABC, into a 2. So we should be able to click this here, run it up, joining our highs, and then we should be able to drag it down to this point, and this gives us a channel, right? So this is functioning in the same way as a pitchfork is, and it's still containing price at the moment, for the simple idea of 1, 2, 3, 4. Is that 3, 4? Sorry, no, I've done that wrong. But you get the point, right? We're either going to come up to a 5 or we're done. In which case, this would also break. This would be signifying that this wave degree is complete and a larger correction has occurred, the exact same way as the pitchfork would be. Right, so we are in limbo at the moment. I want to wait until I see one of those two things happen. Because let's just be clear. Once we get a completed wave 1, whether it's here, excuse me, or whether it ends up being here with another move up, as Elliott wave traders, we're looking to trade the wave 3. Right, that's the one we're really looking to trade. So when we get that a zigzag, whether it's here or whether it's here, this will be the next wave you want to get, because that's the one that's taking us on our way to core of a mill, or maybe not that high, maybe higher, who knows. Either way, that's the wave we're looking to get into. So at the moment, no clarity at the moment. This to me looks more like, let's just zoom in on it again. Okay, really? Can we actually get zoomed in on this bit? Why is it not liking that? Okay, this to me looks more like 3 followed by an impulse. Okay, so I think you've got a 3-wave swing. Oh, I don't use that, I use my brush. I think this is a 3-wave swing to here. Okay, I think this is a 3-wave swing to here, and I think this is a pretty tricky looking impulse wave, but it's definitely impulsive. There's, you know, just look at the structure of the red candles and green candles here, then look at this structure here. This is definitely impulsive, but it does seem to have a pretty extended, if this is a wave 4, you'd have to say 1, 2, and then you have to say 3, 4, maybe we're coming up into the 5th of the C, and then we're going to sell off. I think I prefer the look of that than trying to interpret this move as an impulsive move. So let's have a look at just what we've retraced so far from the low. We're up near the golden ratio at the moment. We came through the 38.2, through the 50, came back to test 38.2, and now we're hanging somewhere around the golden ratio. So would expect to see resistance sometime soon. Okay. Right then, that's enough now. I think, like I said, I don't want to spend time digging through all the minutiae of the account this time. We've done that in previous videos multiple times. If you want to go and watch those, feel free. but I felt that a simpler breakdown of the situation was more required here, rather than just piling on extra analysis, which can potentially just cause more confusion. So we're looking for another high to confirm 5 waves complete, or we're looking for another low to confirm ABC down, and that's it. And both will offer trade setups when they come. That's the long side, and that's the only side I'm interested in taking a trade on at the moment. If you were interested in the short side setup, you're getting close to it already. Okay, what do I mean by that? Which is, you've had an initial 5 wave move down, right? Now you're looking at a 3 wave move back. Enter short, stop, down. Okay, but it's not something I like to do, because we've all seen volatility spikes, more common in smaller caps nowadays than in Bitcoin, but things can move fast, and if you're not disciplined and you don't get the entry spot on, shorting this thing can be a silly idea. It's not by any means impossible, it can be done. It's just not my preference. I like to look for long side setups, and I'm a long-term accumulator of this thing on any significant low, and I treat the money I trade with differently from the money I accumulate this with, and that's it. So now let's look at some basic technical analysis, and then we'll wrap up the video. So let's bring up our momentum indicators. Let's bring up our exponential moving averages, and let's come out to the weekly time frame. Okay. Right then, so as I've discussed before, I'll just run you through, in case you're new, I'll just run you through the exponential averages we've got here. We've got a 10 in yellow, 20 in blue, 60 in orange, 250 in green. We've got an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We also have a MACD with a 10 for the average and a 20 for the signal. Right. Okay. So we came down to hold the 60 exponential moving average, which we know coincides with that median line area on that grand pitchfork off of that initial pivot off of the 2018 low. And that's basically provided strong support the whole time. We moved back above the 10 and the 20 on the exponential on the weekly time frame. We've since tested the 20 twice and we've bounced. Okay. It's not a hammer because the wick is not at least twice the length of the body. It's about the same size. A hammer would be twice the length of the body, and we haven't got that here. So it's not an extremely bullish candle, but 2 longer wicks to the downside to the 20 and a reversal in process currently could suggest a higher high. We'll look at some other factors in a moment to see the likelihood of that. RSI is currently trading in neutral territory below the 60 bound. MACD is currently some green bars but declining into darker bars at the moment, losing some momentum. No sign of crossing over negative yet though on the weekly time frame. If we just come down to the daily, currently above the 10 and the 20, above the 60. We can see in the shorter term here the 60 has been holding the price just as it does on the weekly time frame. It's not perfect because the wicks have come through it, but all the candles have bodied above it, so it's provided support in that sense where we will not body below it. I'm not saying we won't eventually, I'm just saying we were not going to do it here. The 250 is still a long way off behind us. Neutral territory in the RSI. We've had declining momentum here the whole time during this move up. It's not been particularly convincing. In RSI or MACD hasn't really supported it. We've had this huge bearish divergence the whole time of just high, lower high, lower high, lower high, high, higher high, higher high, higher high. You know, a lot of that does not particularly point towards the bullish case. It tends to suggest that there's a larger correction that is yet to resolve from a basic analysis point of view. If we just bring up the volume for a moment, I'll tell you what I'm going to do actually. I'm just going to pop over to have I got a chart for it? I'm just going to bring up this chart for a minute. Okay, to do our basic analysis on. So I just want to bring up the volume. For some reason I haven't got it on here. Okay, so declining volume since the high. This is back on the weekly time frame. The whole time we've been moving down. Volume's been decreasing, even while price has been rebounding. So there hasn't been much volume supporting this move up. Okay. But you know, if we're going into a fifth wave, that's not particularly unusual. You know, the third wave is the one where we tend to see support from MACD, RSI and volume, and it's the 3 of the 3 where that all tends to peak. I mean, a quick reminder of that. Let's just auto the chart. So, like, this is our 1 and our 2 at larger degree, right? Now you can see that volume declined this whole time in this wave 1 and 2. But look at the volume spike into the 3 of the 3. Okay, volume spikes here. RSI reaches its peak in the 3 of the 3. MACD reaches its peak in the 3. Okay, so it's all about the 3 having that maximum support. This is why I've not been in any doubt that this is a 4, whether it's a 4 like this or whether it's a 4 complete. I find all of that very convincing. Now on the shorter time frame, looking at more recent price data, we've had this little increase in volume on the sell-off, right? It's really marginal and not particularly strong evidence, but we've had this slight increase in volume on the sell-off. You see it's higher than the 1, 2, 3, 4 weeks prior. We had a bit more of an increase in volume, and the following week here, which is the bounce, has been lower volume. That suggests to me, although it's not, like I said, it's not particularly strong evidence, that this is corrective. This bounce is corrective and we will continue lower, and when we actually find the impulse off of the low, then we'll get some volume return. But like I've previously said, if we're in that fifth wave, that could be deceptive. Alright then, so that's it. I don't think there's much else to discuss now, guys. Sorry if I've been a little woolly headed during this one. Like I said, still feeling a little under the weather, but thank you for putting up with me rambling all this time. I hope you got something out of it. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Yeah, did I say it? And if you want to, leave us a comment in the comment section below. Alright guys, take care and I'll be back with you soon. All the best. Bye bye.